Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news that China has removed all import duties for infant formula. But firstly, in the US, retail sales are reportedly strong over the Thanksgiving weekend, especially so for online. Not so strong, however, is bank loan growth. It slowed to just 3.5% in the September quarter, according to official data out at the end of last week. That is the slowest growth since March 2015. In China, there are also signs of them pulling their horns in, with a sharp contraction in M&A activity in 2017. The number of agreements fell by 15% compared with a year earlier to 572, while the combined value of these deals dropped by nearly 40% to just $140 billion. And that's according to updated research by PwC. The drop follows a record spending spree in 2016, which saw almost a 300% surge in the value of transactions to well over $300 billion for the full year. And one of those previous high flyers is HNA. The news about credit stress just seems to keep coming for the firm. Meanwhile, in Switzerland, their regulator, the Takeover Board, has accused HNA of supplying partially untrue or incomplete information during the takeover Gate Group. China has removed the duty on infant formula, chopping it from 20% as part of a long list of other consumer health products, including some luxury goods, where import duty has been cut on, or in the case of infant formula and diapers, it's been cut to zero. German business is anticipating a boom in their economy. The latest business climate indicator beat analysts' expectations and climbed to a record 117.5 points in November from 116.8 the previous month, itself a record high. In Australia, new research shows that satisfaction with banks remains high, although it dipped a minor 1% over 2017 to 81%. The bank in the crosshairs of regulators, the media and the politicians at CBA held on to its top spot amongst the majors. Satisfaction was lower for mortgage customers, higher for customers of other services. Generally, however, Aussies are not optimistic about what's in store for them in 2018. In New York, the US Treasury 10 yield has risen slightly to 2.34%. The price of crude oil is again higher today at just under $59 a barrel, while the Brent benchmark is just under $64. That's the highest it's been since May 2015, and together with our lower exchange rate, signals that pump prices for petrol are about to shift higher and back to levels we last saw in 2014. And on a tangential note, China has told the WTO that it will stop taking the world's recycling materials. That will mean a collapse in prices for paper, cardboard and plastic that are recycled usually by street collection. It is a move that could put upward pressure on our local body rates. The price of gold is unchanged at $1,287 an ounce. And the Kiwi dollar will start today, little change from where we left it on Friday. We're now at 68.8 US cents. On the cross rates, we're at 90.3 Aussie cents. But against the euro, we're up to 57.7 euro cents. That puts the TWI at 71.4. I'm David Chaston. That's 90 at 9, brought to you by interest.co.nz.